Ticker symbol COSM facing a very interesting downside before an immediate recovery. That just goes to show how many bulls are actually present for the COSM asset, right? Let's go ahead and go over the potentials for the next session. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COSM technicals, raw price action, and statistical thread of analysis on this Hump Day Wednesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so we are looking at COSM on the 8-hour chart here, guys, and this is the Gaussian channel that we have been speaking of, right? So I want to point out something very curious here. Of course, you see the candles all different colors, right? And that's particular to the Gaussian channel effects, right? So what I want you to notice is just look at the massive amount of red candles here. And look at what's happening right now. Oh my goodness. All right. So yeah, we are making our way upside of the mean band here, you guys. So this is a very, very exciting thing. Okay, we need to make sure that we can maintain ourselves above the mean band, as that would suggest a pretty nice move to the upside. So, and it actually has happened several times historically speaking, right? So whenever we start getting those green prints, we can actually start making some pretty nice exponential moves to the upside, even similar to this, right? Of course, we came back to validate and then continued on to that upside. But yeah, as soon as we start breaking upside of that mean band, guys, definitely some very interesting price action happens, right? So I like it. So let's go ahead and now just come back to here to make sure that, okay. Yeah, so this capitulation candle from today, very, very interesting, right? But what I want to point out is that the bottom of that capitulation candle came down to a very specific level, okay? So let me bring my chart. I don't even know why I have it all the way over there. Whatever. It's there. Okay, so I want you to notice here that, you know, this was the chop area that we were talking about, right? If you're unfamiliar with this chart, it's this one. It's where we had the triangle, right, that we were supposed to break out of but never broke out of, right? So this is that chart, and we have located that consolidation zone, right, or that chop area. So I want you to notice that we came back right to that 301 level that we've been speaking of for some time. And why is it that 301 level? Well, because we've used that 301 to kind of explode to the upside several times, historically speaking, right? Since I would say since about, I mean, we used it for the first time as resistance here on October 26, 2022. I actually spoke about this in the space call just last night. I was explaining the importance of the space between 278 and 301, or 280 something and 301. But 301 is just a very, very important target. And as you can see here, that capitulation candle here, this 12-hour iteration, came down to the L, right? You can see the L right over here. So let's hover over it, and you can see 301 right on the money, and it actually just bounced very, very violently to the upside, right? So that's it's just showing that that 301 is an extreme demand zone there, guys. So let's go ahead and move on to the next chart and see what we have. Okay, you guys, so this is the shorter time frame falling wedge that we've been looking at as well, right? So we can definitely consider that capitulation candle as a test of the newly converted resistance into a support, right? Huge bounce to the upside. We've converted the 1.272 Fibonacci ratio into a support now, right? As it's currently sitting at about 346, price action sitting at 348 currently. Okay, so this is definitely looking pretty good. That capitulation candle, though, did make a number in our momentum here, but I would like to show you that the momentum leading indicator here would be the 3-day exponential. So the 3-day exponential moving average would be the one to influence the 14 before the 4. I'm sorry, the shorter time frame influences the longer time frame. You know, it's just, that's physics. It's literally the laws of our existence here, right? So you can see here that the upside pivot is still more significant on the 3-day than of the 14 blue one, right? So this is definitely suggesting that we could be continuing on to the upside. And another indication of it would be the fact that we are, first of all, within the bullish control zone here, and also that we're just about under 2% away from the gravitational zone here. Actually, let me see, that would be 80 to about 78, right? So the gravitational zone would be located right about that 78%, which would be right about here, right? So we're I mean, we're dangerously close to that right now, which would usually help us get pulled to the upside, right? So yeah, let's go ahead and now continue on the analysis here and see what else we have. Okay, so immediate short-term time frame, 30 minute. Okay, looks like it could be facing a little bit of a downside here. Remember, 30 minutes are likely to live out pretty fast, just definitely within about an hour or two, and we can actually face support from that 14-day simple before a continuation to the upside, as we have been doing, right? So and also notice that the pitch on this 14-day simple moving average, which is represented by the pink line, is still within upside posture. Okay, so the 4-hour, the 4-hour is still pivoted towards the upside, very healthy. We have that 14-day simple pivoted towards the upside too. In the gravitational zone here of the 8-hour, which means that we can actually face an upside, but there also could be a small pullback, since we have seen, historically speaking, some pullbacks from that area, but very small. Pardon me, the 14-day simple is pivoted towards the upside too, so that's good. The daily time frame still pivoted towards the upside. Definitely a tiny bit of weakness here, but that's as usually expected, because we are at the gravitational zone of the bull weakness percentile, so that, you know, sometimes could actually have us come back down, right? But I would like to just tell you that it's okay that even if we did, right, because we have the 14-day simple moving average likely to land at this area here, which would be the gravitational zone of the bear weakness percentile. So in that case, we would find a support from a 14-day simple, right, and the gravitational zone before a continuation to the upside. I'm not saying that we're going down. I'm just saying that it's showing just a little bit of weakness here, and we have to kind of keep our eyes and things like that, right? So by daily time frame, absolutely above the 14-day simple moving average, and definitely clear above it for the first time since, let's see, February 3rd, 2023. So, I mean, it's April 26th. Definitely took some time for us to get upside of that. Okay, so it's looking good. And now, more importantly, guys, in about 19 hours, the 5-day candle closure will be closing, right? And that would essentially affect our momentum. It'll flash a momentum to either the upside or downside, depending on where we close, right? So if we are kind of, let me see if I have a chart here for the 5-day anything, right? Even, yeah, I guess even we can do this one here. It's already on the bi-daily, so let me get, yeah, we're right at the resistance of that mean band 348 that we were talking about yesterday. So we really are knocking at that door, that thing. So let me just kind of block the visibility here and bring up the 5-day. And yeah, in about 18 hours and 57 minutes, so just about 19 hours, right, we should be closing this 5-day candle, right? So now closing this 5-day candle upside of the 347 resistance would be highly ideal, right, as it would be closing upside of the opening from this candle here at 345. Right, so that would be a very bullish statement for COSM, and definitely something to consider a continuation to the upside from. Okay, so yeah, so this would, upon that closure being green, the RSI signal represented by the purple line would likely find its upside here. Okay, or it'll get flashed to the upside upon that closure. Okay, you guys, so yeah, shorter time frame, very, very tiny pullback coming in, right? So if we were able to see what that pullback is even like, then, you know, yeah, we could just take a quick look at that. Very likely for us to come back down to about 334 before a continuation onto the upside, and eventually finding some resistance at about $3.61 in line with that 8-hour 100-day simple moving average. Okay, so this could very well happen tomorrow, right, guys? So let's just keep an eye on our asset, and let's just keep trucking, right? So if you are curious over the volatility versus momentum statistical backtest, well, this is, I mean, the criteria is pretty much there. We now have the moving average with an upside pivot beyond the 15 percentile and the 10 percentile, right? We also have an upside pivot on the volatility component itself. And also we have a correcting pivot towards the upside in momentum. Okay, so that criteria or that condition would be indicative of a pretty large move. Okay, so that move to the upside would be, well, statistically speaking, the mean lands at about 207%. with a standard deviation of about 382% or almost 383, right? So, and the higher end of a first standard deviation is landing at about 589%. Okay, so I do have all those targets kind of lined up already for our view here, right? So you have that upper end of the first standard deviation landing at about 2353, which just so happens to be near the high of 2384 from post split. Right, so very curious that it would be landing there. The first standard deviation, 387% to the upside, would lead to about $16.65, and the mean itself, the average move, would land at about 206% and at $9.36. Okay, you guys. So just a couple of targets to look at regarding a statistical backtest. I'm not saying we're going there. I'm just saying that whenever that condition that we spoke of regarding volatility versus momentum, that those moves would be kind of to follow, right? Historically speaking. All right, so guys, I still have about a seat or two left in the ArcMasters trading course. We started the first week just on Sunday, but that was just an introduction week. And we should be officially starting the courses this coming Sunday. So find the email in the description below and get enrolled, and we can move forward from there. Okay, you guys, this will be the last course this will be the last course that I'm teaching. I need to get back into trading. I need to get back into concentrating, and maybe in a year or two or something later on down the road, I'll consider teaching again. But for now, guys, it's going to be kaput. Okay, please remember first and foremost that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever, ever, never. Okay, you guys, please do your own due diligence and everything will be cool. All right, so with that said, I wish you well, a very, very good night, and I will catch you at the bell mañana. Adios.